Every month, 3 boring sounding events decide whether your bag moons or gets margin called. I'm talking about the CPI, the FOMC, and every government power play. These same events have triggered big market moving swings in Bitcoin and Ethereum and in almost every altcoin. What's the difference? Wall Street has these dates circled in red. So does smart money. You probably just see a tweet and panic, don't you? Well, let me help you fix that. Now, this isn't an econ lecture, no fake Bloomberg subscription. I'm just gonna give you a little cheat sheet so you know when the market's about to go risk on, risk off, or just pull the plug on your whole portfolio. That way you can front run the herd instead of just chasing it. Let's get into it. Let's remember, crypto swims in the same liquidity pool as stocks and other assets. Hot inflation, the Fed hikes harder. Liquidity dries up, and then risk assets dump. Cool inflation, the Fed relaxes, cheap money, and risk rally. Now, there's two main indicators when it comes to measuring inflation. There's the PPI, which is the producer price index, which is basically inflation at the factory level. It's showing us whether producers' costs are going up or they're going down. Because of course, if producers' costs are going up, usually that in turn leads to consumer prices going up. Common math. Then comes the CPI, the consumer price index, which is inflation at our level, at your level. This is the one that hits the headlines and moves the markets fastest because it's the one that directly affects consumers. It directly affects us. It shows us how much consumer prices are increasing or decreasing, and it shows us if there's inflation when it comes to consumer prices. Here's two real world examples. Around February 13th, 2024, CPI comes in harder than we expected. Bitcoin slipped around 2% within an hour, which I know isn't a lot, but what if you would have taken that account into your trading? You also always have to be conscious of the prediction because that way you know what's a good CPI and what's bad CPI, and you can measure whether it's hot or whether it's cold. The same goes for the PPI. You see the pattern here? Basically, a low CPI versus expectations means lower inflation than was expected. Usually makes price go up. A high CPI over expectations usually means higher inflation than expected, so price usually goes down. Now, this isn't a rule, even though it's a high likelihood, but still, it's something to take into account. And again, don't try to guess the number. Let the first move happen and then trade on the second wave once the dust finally settles. Now, the Federal Open Market Committee, or the FOMC for short, is basically 12 people, one button, and a press conference that basically moves trillions of dollars around. They decide if borrowing money gets more expensive or cheap. If they hike rates, that means money's tight and risks bleed. Rates down or pause, liquidity floods because borrowing gets a lot more cheaper, and guess what? Our bags pump. It's not a coincidence Trump's been begging for the Fed Chair Powell to lower rates. He wants everything to pump. And it's not just the rate that moves the market, even the Fed Chair's own tone. It's the dot plot, the Fed's own forecast. If the forecast is hawkish, down we go because we're not expecting rates lowered anytime soon. If the tone is dovish, up we go because we're expecting a rate lower. In 2024, the Fed held rates, but the dot plot showed the possibility of 3 rate cuts later in the year, which would lead us to think that's probably one of the reasons why we had such a bullish end 2024. Like I said, it's not only about the rate, it's also about the dot plot. And you can't just trade the first thing that happens once the conference starts. A lot of reversals happen mid-press, so always be attentive because it could start out one way and it can end up completely different. And now on to executive orders. President says basically do it now, disregards Congress entirely, and he can set the entire crypto tone, and not just crypto, macro tone, just overnight. We've seen Trump do this year unlimited amount of time. He's like a monkey with a pistol, which is why we always have to be on the lookout for those. Let's not forget what happened when he initially launched the tariff. We were in the middle of a bull cycle, weren't we? And then all of a sudden, he decides to put tariffs on half of the world, and unfortunately our bags just went to hell. And there's also the SEC, CFTC hearings, but most of the time these are just power plays and a lot of political theater, but we still have to take a close eye on them because one compromising sentence from a regulator can kill alts or can also send them flying. We've seen this before, even recently when the SEC chair said that Ethereum wasn't considered a security, or in the bearish case when the XRP situation went down. You know what I'm talking about? Especially alts get affected a lot by these headlines. Bitcoin usually holds stronger, and then eventually the capital rotates back once the dust settles. Now, knowing what all these things are is completely useless unless you use them. And here's how. Number one, mark the dates. Grab the 2025, 2026 CPI, PPI, and FOMC calendars and write them down, or at least set reminders for yourself. I'll leave a link to these in the description. Number two, know the forecast. Check the expectations on websites like investing.com. Markets move on the surprise, like I explained before, not the number. They move on the result versus the expectation. Number three, use the two-wave method. Ignore the first 1 to 5 minute chaos. Trade the confirmation move. And number 4, please manage your leverage. Avoid pre-event positions unless you're literally just trying to gamble. If not, always keep your trading low or sensible on a meeting day until after the dust settles. And finally, always track correlation. The CPI/FOMC impacts the DXY, which for those in the back is the dollar index. And this inversely correlates to Bitcoin price. And there's a lot more correlations that could be had. So yeah, inflation prints are the Fed's scoreboard. FOMC is them calling the next play. Government power plays love to change the rules mid-game. But if you know the dates, know the forecasts, and how to actually read the first move, you're going to stop trading blindly and you're actually going to start trading prepared and make a lot of money out of it. That's all for today, boys. Don't forget, I'll leave you some links in the description so you can actually see the calendars and write them down. And like I said, actually use the information I'm giving you, because if not, you basically just wasted 5 minutes of your life. Take advantage of it and start front running the pump instead of just reacting to the tweet. In future videos, maybe I'll get more practical into how to actually trade these days, like an FOMC meeting, a PPI update, etc. But for now, just don't forget to leave a like, comment, and subscribe so you can stay in tune for all these future videos. And yeah, that's all for today, boys. Later.